Today felt like a win for the grain market bulls. Prices bounced from support levels, and soybeans even erased mid-morning losses to end the day with solid gains. Sellers came back into the cattle complex, but buyers are still driving price action in the hog market.
Live, toweling off after the Hump Day hike via Farm Journal broadcast, this is AgriTalk. This afternoon, it's a conversation with Clayton Pope from Clayton Pope Commodities. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm handsome newsman Davis Michelson. Now here's the host of AgriTalk, Jeff Flory.
All right, Davis. Hey, thank you so much. It's got all the way to 41 degrees.
41 degrees, you say?
41 degrees. Of course, I think the winds have gotten all the way to 40. Pretty consistent. I have not gone out and looked yet.
Uh-huh.
But I call it within the last 15 minutes, I heard a tree go down.
Uh-oh.
Yeah, I don't even want to go look. No? I mean, I'm getting close to wood burning, the end of wood burning season. It's not like I need more. I hope it didn't hit anything too important.
Yeah.
Right.
Or anybody. Yeah. You got to be careful going out there, dude, in the wind like that.
Oh, I don't. I do not.
You don't have to be careful? You got some kind of superpower? Is that what it is? You wear a cape when you go out there?
I do not go out there when the wind is blowing.
I got you.
No.
That's probably smart.
Not at all. Not at all. Not out in the timber. There are too many dangers out there waiting to get you.
Yes,
Welcome
banshees.
to AgriTalk. I'm Chip. That's Davis.
Got to watch out for those wind ghouls.
Yeah.
Sorry, you're trying to be serious and do radio. I'm sorry. Go on.
You got to watch out for it all. Clayton Pope is going to be with us here coming up in the next segment. We got Bubba coming by here in a bit. Yeah. But like I said, it felt like it was a good day for the grain market bulls.
Okay.
Wasn't a great day, but it could have turned into it could have turned into something really negative. The way that the bean market was trading lower at mid-morning.
Yeah.
Beans could have won and pulled wheat and corn down. Instead, corn and wheat won and pulled beans to the upside. So I'm calling that a victory for the grain market bulls today.
Right on.
Let's get to it.
Chip wheat futures held on to and even extended mid-morning gains through the close. Money management and position squaring are still the main drivers of price action in the wheat market, although some traders noted Ukrainian exports of grain through the first 9 months of the marketing year are down 6.8% from a year ago. May soft red winter wheat futures opened slightly lower and slipped to test support at 540 before rallying to test resistance at 560 and to post a high range close.
Yeah.
July HRW wheat futures 14 1/2 cents higher today, 572. July SOW wheat up 10 1/2 cents to 572 1/4. July spring wheat closed at 647 3/4, up 10 3/4 cents, Chip.
Yeah, May soft red showed us the range again between 540 and 560. And, you know, the idea of a Ukrainian headline creating some activity in the wheat market, I don't know if it does or not anymore. Yeah. We'll talk to Clayton about that here in a bit.
May corn futures posted an inside trading range with the low range open and a close near session highs. Gains in the wheat market helped corn add to mid-morning gains. Ethanol production in the week ended March 29 averaged 1.073 million barrels per day. That's up 19,000 barrels from the previous week and 7% ahead of the same week last year. Ethanol stocks in the week increased 324,000 barrels to a hefty 26.416 million barrels. Traders also noted talk of efforts to increase corn production in China that may have capped the morning rally in corn. May corn futures were 5 1/4 cents higher, 431 3/4. July corn up 4 cents, 445. December corn futures closed at 471 1/4. That's up 3 1/4 cents.
When May corn was trading under 430, it could have gotten ugly if it couldn't have climbed back on top of 430 by mid-morning. It did. That's good news.
Bean futures opened slightly higher, but traded mostly lower ahead of mid-morning. After spiking support at yesterday's low, short covering and spillover support from corn and wheat helped bean prices post a high-range close. Soybean meal futures also erased losses to help soybeans trade higher. Traders also noted that the Brazilian bean harvest is in the final stages. Hedge pressure in U.S. bean futures is beginning to lighten. May beans were 8 1/4 cents higher, 11.82 1/4. July up 7.5 to 11.95 1/4. November soybean futures closed at 11.84 3/4. Chip, that's up 7 3/4 cents today.
Yeah, and it looked like look out below.
Yeah.
When May beans slipped below yesterday's low at 11.71. Didn't spend much time down there. Came flying right back with a high range close.
Chip, July cotton was 153 points lower today at 90.18. On your livestock's heavyweight choice graded boxed beef prices continued the week-long slide this morning. Prices were $1.65 lower, but movement was good with 92 loads changing hands. April fat cattle were 85 cents lower on the day, 180.92 1/2. June futures down 77 1/2 to 175.60. And April feeder futures, $2.55 lower, 240.95. And on the snout side, lean hogs were solidly higher with summer month futures trading to new contract highs. April hogs $1.42 1/2 higher, 87.97 1/2. June hogs $1.02 1/2 higher, 104.75. Chip?
I think the bottom line on cattle is the longs are spooked. They aren't convinced that they need to stay in a long position at this time, and I don't think, based on volume and open interest, that we're seeing a whole lot of fresh buying coming into the market either. Todd Horwitz, BubbaTrading.com. How you doing, Bubba?
What's up, guys? Who'd want to buy them?
Well, that's what I was going to ask you.
I don't want to buy them. I'm selling them. Yeah. I told you before that I think they're going lower. Again, it doesn't make sense with the economy. They've made all-time record highs, both fats and feeders. And again, we look at the overall situation. The biggest concern is still the grain market, because if you look at commodities around the globe, from cocoa, which went over $1 for the first time ever, the orange juice, coffee, everything is flying. But yet the grains are stuck in mud, and they're still in this consolidation range. It was a nice way to close, but we really need to get some steady buying and a real rally, not these up and down that actually makes lower lows every time they come down.
Yeah. Are the ag commodities getting left behind by the rest of the commodity world?
Well, I think there's some pressure being put on them via China. I think they're trying to force some action, and they're kind of selling. That's the way I can see it. I mean, I can't say that for sure, but that's how I would guess it, because it's unbelievable that they can stay at these low prices that we have when everything else is exploding higher. Yeah. It's a weird anomaly.
Yeah, it certainly is. We got 30 seconds left. I got time to ask this one. Talk to me about your attitude in equities.
I think they're done. I think that this was a natural rally we expected to see today. Even if they're still higher, I'm not paying attention. But again, the Fed cannot cut rates with the hot inflation. The numbers don't bear them out. So either if they cut rates, that means there's big trouble ahead and a recession, which I think we're already in, or they're doing it for political reasons. But by basic numbers, they cannot cut rates.
Bubba, they wouldn't do it for political reasons, would they?
No, they wouldn't do that. Why would they want to keep the ventriloquist in the office?
You're the best, Bubba. Thanks, man. We'll talk to you next week.
Thanks, guys.
Oh, Todd Horwitz, BubbaTrading.com. Okay, you know what? I think we stumbled on a theme. We're going to need to talk about the inflation and are ag commodities left behind by the rest of the commodity world. We'll ask Clayton Pope about that next.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind.
Welcome back to AgriTalk. I'm Chip. All right. Clayton Pope. Clayton Pope Commodities is our guest analyst today. Let's get him right in here. Clayton, it's great to talk with you again. How are you?
Hey, Chip. I'm doing fine. Good to be back.
Good. Your NCAA bracket, has it survived anything?
No, I am blowing out of the water. I mean, I had to go with Illinois. I'm a true Blue Illini fan.
Yeah.
But my son's a Purdue grad, Taylor, who's actually co-owner of Clayton Pope Commodities.
Yeah.
And he's a Purdue grad, and he is actually heading out to Arizona with like 12 of his fraternity brothers. They are psyched beyond description.
That that sounds like a lot of trouble. I hope you've got arrangements made in case they need a little bail money or something, Clayton.
That's right. Yeah, you better not take the company credit card with him. That's all I gotta say.
That's right. That's right. Okay, buddy. Well, good luck to the Boilermakers. I'll say it. The Illini took us out at Iowa State, and
yeah, that was a good game.
Yeah, it was. It was. But gotta throw the hope out there for the land grants and hope that Purdue keeps things going here. So
yeah, I hope so. They're gonna have the work cut out for them against UConn. Those guys are amazing.
Oh, it is. It almost seems like they are playing in a different league than than what the college boys are. That's for sure.
Yeah, no kidding.
So, all right, let's get to it. The theme developed. I didn't even force it, Clayton, and it fits really well with a couple of things that I know that you wanted to talk about. The question has been asked already on the show of Bubba. Are the ag commodities being left behind the rest of the commodity world when it comes to inflation?
Well, they sure have been so far. There's no doubt about that. It's pretty pathetic when you look at that widening chasm between eggs and everything else, it seems like. I mean, as I'm looking right now, silver up $1.26 in one day, almost a 5% move. And crude oil, although it weakened a little bit into the close, I mean, still finished positive. That stuff is on a roll, too. Well, one thing that comes to mind when you think about inflation for ag commodities, I mean, we've all seen those models that if you apply the CPI rate to grain prices, from 1970 or 1980 or whatever, we should have, some ridiculously high corn and bean prices. And obviously that just doesn't ever hold true for a lot of reasons. I guess, just the yield explosion and everything.
Yeah, productivity. Yep.
Yeah. But it's not to say it doesn't have an effect. And I think, the more glaring that chasm becomes, I think it is definitely going to encourage more buying, just bargain hunting coming in here. And also when you see the inflation effect on the dollar, which maybe is kind of topping out today for a little while anyway. I mean, it's just been on a heck of a run here, kind of confounding an awful lot of people's predictions. But if you do see that dollar start to back off, I would think that maybe you would start to see that encourage some more buying, at the very least some more fun short covering, I think. Yeah. So from that standpoint, I would expect, more of an inflation effect going forward here in the short term, at least to some degree, but nothing really wild, just because, I mean, the fact is we still have some really comfortable carryovers and, big harvests coming up and so forth. So there's obviously a million different factors at play, but I think that theme is a little bit of a positive at the moment.
Yeah. I was thinking about the dollar earlier today. Took a look at the chart. It rolled right back up there to 105 in late trade. There's a general uptrend going, but that 105 was, when was it? It was middle of February was kind of the level that we got to back in the middle of February. And if we can close it over 105 or above that February high, there's some additional upside potential, but it kind of feels heavy again, doesn't it?
Well, today it does. It sure didn't before today. I think you really got to look at that crazy bond market, for the best clue what is in store for the dollar. And that bond market has obviously just gotten crushed here the last couple of days. It had a really nice rebound today. I mean, only finished a couple ticks higher, but it had been down probably 0.75 of a point on its low, to a new multi-month low. It's just that when you look at the U.S. borrowing needs, and what we all know now, we have a $35 trillion deficit, and that's not even counting an awful lot of stuff that we don't even go into. But when you look at our borrowing needs, you got an awful lot of Treasury debt that has to be rolled over this year. Our interest expense is already approaching $1 trillion a year. It just doesn't seem like there's any way out except for more Fed money printing and therefore higher rates, it seems like to me. I mean, a lot of those models for so long have been talking about, 3 rate cuts coming in the next year and all this kind of thing. It's like, who are you kidding? Have you guys looked at the bond market lately?
Yeah.
I mean, the bond market is kind of keeping people honest, I think, to some extent. I just don't see how the Fed can come in there and cut. I mean, we've talked about this before a little bit on this show. I mean, I think to a much larger extent than most people acknowledge, and I'm not some know-it-all here, but my opinion is to a much larger degree than most people think, the Fed is following the real interest rate market.
Yep.
They're not determining it. I mean, sometimes they step in front of it and definitely have an effect on where rates are going, but I think for the most part, they're following it. And the market is giving a big, they got different plans in mind. It seems like I don't want to swear on the show.
Were you going to refer to some strategic digit on a hand there?
That's right. Yeah.
That's what I thought. That's what I thought. Yeah.
Some kind of acronym, but I won't even go there.
But you're right. I think you're exactly right. You look at the cash market, the real interest rate market, and it kind of makes you shake your head about all the talk about rate cuts. Clayton, what I don't understand, and I think you're right. I think you're right. They're following the cash, the real interest rate market. But how can Powell even sit in front of a group of reporters like he has the past couple of days and say with a straight face that they're still planning to cut interest rates? I don't get it.
Yeah, I know. Well, I don't know. You see a lot of things said out of Washington with a straight face that kind of leaves you scratching your head. But no, that is a hard question to answer, and I don't know. I mean, there's no question the Fed's got a bag of tricks that we have no idea what might come up next.
Right.
By all logic, though, we're really kind of painting ourselves into a corner here with the borrowing needs we have. You look at the federal spending. I mean, we're spending, what I read the other day, we're spending like twice what income tax receipts are. Mm-hmm. I mean, it's just lunacy. And it can't continue without something breaking, it seems like. So,
Clayton, Clayton, President Biden is going to fix all those problems by raising taxes.
Well, that's not going to be enough.
No.
I know you're joking around here, but obviously,
you can't fix the problem with raising taxes.
The more you raise taxes, you're killing the goose that laid the golden egg.
Exactly.
So, I don't know. They could go out there and print ad infinitum. They could buy their own debt. All these different tricks they'll do, but it just seems that they're kind of kicking the can down the road. The problem is we've just got an ever expanding debt problem. If you look at the federal expenditures, we're approaching the point where the non-discretionary spending is almost 2/3 of all spending. So this rigmarole we're going through in Congress about how can we cut spending, blah blah blah. They're only talking about a small minority of spending that they can even touch without like some major legislative changes. So I don't know. It's Dude, a head scratcher, and it's a pretty scary outlook, I think.
It feels like if they would. If we're dealing with 1/3 of spending and where the cuts can be made, I don't know if that, to me, that should make it easier to find spots to cut. And get it done. Find a way to cut the spending. Well, you'd
think so, but I think it's just too easy for the politicians to not say no because they're afraid of getting voted out. And we all know that for too many of them, their number one concern is getting reelected. It's not true for everybody, of course, but too many of them, it seems like that is their main concern. So I don't know. We just keep getting an advance on our credit card. And at some point, I think, the dollar or the world is going to say, time out, guys. Enough's enough. And I don't know where that point is, but you think we're kind of rapidly approaching some kind of big changes coming up one way or another that'll be forced on us.
All right. Great conversation, Clayton. Some important thoughts. And that's putting some attention where it needs to be. Good stuff. We're in the middle of a conversation with Clayton Pope, Clayton Pope Commodities. Let's talk demand next.
30.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 14 and 1/2 cents higher, 572. July SOW wheat up 10 and 1/2 cents to 572 and 1/4. May corn futures were 5 and 1/4 cents higher at 431 and 3/4. December corn futures closed at 471 and 1/4, up 3 and 1/4 cents. May soybean futures 8 and 1/4 cents higher at 1182 and 1/4. November beans closed at 1184 and 3/4, up 7 and 3/4 cents today. July cotton 153 points lower, 90.18. On your livestocks, April fat cattle were 85 cents lower, 180.92 and a half. April feeders $2.55 lower, 240.95. April lean hog futures $1.42 and a half higher at 87.97 and 1/2. Try profarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Our name says it all. AgriTalk. What more do you need to know?
Welcome back to AgriTalk. I'm Chip. Glad that you are with us on this Wednesday afternoon. Clayton Pope Commodities is our guest analyst. Clayton, like I said earlier, great conversation there about inflation and what it might mean for these commodities going forward. Let's talk a little. I made this comment during the news, and so we need to come back to it. There was a little bit of a mention about some things happening in Ukraine. I wonder if Ukrainian headlines even get the attention of the wheat market anymore.
Boy, it doesn't seem like it. It's kind of like the little boy that cried wolf. At first he saw big reactions to some kind of bombing near Odessa or whatever, and each time as the months go by and it happens again, it just means less and less, it seems like. So I think they've proven that they can still get this grain cranked out of there some way, somehow. I don't know how the heck they do it, but even when the Black Sea was mined and so forth, they resorted to railway transportation, all that kind of thing. And, what was a couple months ago, Ukraine actually had like record exports. I mean, it's just kind of hard to believe, really.
Right.
But I don't know. I think one of these times, especially like, with Russia's production and so forth, people have been able to ignore it so far. I think maybe part of that is the funds to blame. I mean, they just got their boot on the throat of this doggone wheat complex. Mm-hmm. But I think at some point here, you're going to get a straw that breaks the camel's back, and you will start to see fundamentals better reflected here, and maybe see that whole inflation concept ripple through the wheat market a little bit. I mean, we've got you look at the stocks to usage ratio. It's the tightest world stocks to usage ratio in 9 years. It's the second tightest U.S. stocks to usage ratio in 9 years. So
wow.
What gives here? This stuff just can't hold a rally to save its soul. Although today it had decent performance, but still didn't approach yesterday's high, or didn't better yesterday's highs. But as far as Ukraine goes, I think things got to get worse, I guess, before the wheat market's going to really recognize that. Or Russia's got to stop being able to freely transit the stuff out, or face some kind of weather threat. Yeah.
Well, here we are, 2 years, 2 months into Russia's invasion of Ukraine. There was, when the invasion first happened, there was a lot of talk about, well, we're gonna know a whole lot more about how long this is going to take for Russia to win within the first 100 days.
Yeah.
Now it just feels like this thing is going to go on forever. And like you just said, Ukraine has made some incredible adjustments and are finding a way to keep product flowing to the exports.
Yeah, I know it. And there's certainly no end in sight on this thing. I mean, I know keep having this fight in Congress, whether to keep the funding going or not and all that kind of thing. But it seems like one way or another, funds continue to find their way over there, and this thing just not showing any sign of slowing down, really.
Yep.
Nor is the Israeli conflict over there after the Damascus bombing a couple of days ago. Holy cow! But that all kind of ties into what we were talking about earlier. I mean, again, we've just got this open checkbook on so many fronts.
Yep.
How the heck can we keep doing this? This last bill that was passed, I mean, we're sending, I can't remember the figures, hundreds of millions of dollars we're sending overseas to subsidize Middle East countries' border security.
Yeah.
I had to read that headline twice. I mean, seriously?
It's crazy.
I don't know. It's lunacy, but one way or another, some changes are going to be forced on the United States, I think. We just cannot continue this.
Yeah.
And when we get, so many deficit issues and problems here at home, but, that's another topic for another show, I suppose.
Okay. All right. Let's move on to domestic issues. When you think about the 2024 growing season, how does the growing season hook up with the markets? What do you expect?
Well, first of all, before we jump in the U.S. growing season, I think the safrinha crop in Brazil is extremely important. And there's just such huge variation in the guesses for that crazy thing. I mean, you've got USDA saying that the total corn production down there is going to be 124 million metric tons. You got CONAB at 113. Now, 11 million metric tons is a lot, and we haven't even gotten into their main yield determination period in the calendar. So just like beans, I mean, there's huge differences of opinion on what the bean numbers are, although that's going to be decided pretty quick here, I'd have to think. But as far as corn goes, anyway, so that's going to be a big deal. But as far as U.S. goes, well, typically, if weather allows, and let's face it, most years it does, these acreage figures from March 31st or this year, March 28th, tend to grow, if anything. So I think to look at those acreage numbers, and we did get that bullish quote-unquote surprise last Thursday as far as the corn acres go, but I think most trade realizes that number's in all likelihood not going to get any lower. And if history means anything, it would tend to creep a little bit higher. So that's a big deal. I think we had an awful lot of dryness a couple of weeks ago, but, some of that drought area in the U.S. has certainly shrunk after this system that we're in the middle of right now.
Exactly.
So... I don't know.
I don't think we
scoff at I'm sorry.
I don't think we should underestimate the impact that the moisture event that we're having right now, the impact of it on the market. I know it's early April. But just the fact that it is raining, the fact that we are getting some precip, I think it matters to this corn market. I really do.
I think it matters a lot. I mean, you looked at that drought map a couple of weeks ago. That east central Iowa was really scary looking.
Yeah.
And we all know, the real bad drought years, with 1988 is the granddaddy of them all. I mean, that dryness began real early.
Yep.
And now you're kind of taking that away from the Bulls, chest here arguments that they might have to go for a rally.
So the longer we push a potential weather concern, the deeper we push it into the growing season, does it become more difficult to get a reaction from the market?
I think it does, absolutely, and especially in light of what we've seen these last 2 years, where we had such horrific periods where anybody in my position where they have, producer customers, you talk to some of these guys who've been farming for decades and they swear they don't have a crop. And, lo and behold, oh my gosh, I can't believe it. I've got a record yield.
Better than expected.
No fault of theirs. I mean, they're looking at what they see out there as a total disaster and whenever, July 4th or whatever. And then it's just absolutely amazing how these crops keep recovering. So I do think that the skepticism that's being bred by these recoveries in yields is a little bit of a danger to the market. It's going to be harder and harder to really convince the trade, although I say that, and on the other hand, I mean, I've thought that in previous years too, and then lo and behold, we do get a weather scare. It's kind of like Charlie Brown holding Lucy holding the football for Charlie Brown.
Yeah.
The trading public falls for a weather scare again.
Yep.
And let's hope they do this summer.
Yeah.
Let's hope we get some kind of scare here, because
and let's hope we take better advantage of it in 24 than what we did in 23, right?
Well, you'd think so, but I think in the back of everybody's mind, everybody knows the possibility is there for a major problem. Yeah. I mean, look what's happened in South America in the last couple of years, whether it's Argentina or Brazil. They've both suffered some pretty big hits in the last 2 or 3 years. So there's no question that some really yield damaging weather can inflict some pain on us, but we've sure dodged some bullets the last couple of years, no doubt about that.
Yep.
So I don't know. I do think that with the lower acreage figure for corn, though, it kind of would add fuel to a weather problem if it does pop up.
Okay.
Because now all of a sudden, if you had unchanged acres from a year ago, it'd be even almost impossible. Well, not impossible. It'd be even harder to generate a weather concern rally. But when you got acres down to what it is, then it could throw a little fuel on the fire if we started to get some hot and dry scenario.
Okay. All right. New crop corn. You looking to sell strength in that market?
Yeah, I think so. I think you've got to get a little bit more done if you got to reward some strength. See, when we got that report that came out Thursday and everything shot up, I think you had just an awful lot of like pent up demand to sell.
Yeah.
And that was satisfied. You had a lot of selling unleashed, Thursday afternoon and Monday. And I think, that kind of worked through the system the last couple of days. You probably had funds. They love to, they're not ones to panic. And all of a sudden you see something bullish happen. They're not going to rush out there and buy and cover their shorts. I mean, rule number one from Jesse Livermore is to add to your shorts in that current scenario and defend your position. I think that's exactly what they did. But I think the last 2 or 3 days, it's kind of worked through that selling. So I think we're at a real pivot point right now. I think the next few days here are important, but we got to get that doggone May corn above its 50-day average, which at this point is about 7 cents above us. And I thought, if we can get it above that on a staying basis, and same thing with May beans, I think you could turn some heads and significantly better the chances of the funds coming to the table and covering some of those shorts. But it's going to be price action that inspires them to do so. It's not going to be, a surge in demand all of a sudden.
Right. Gotcha. All right. Well, hopefully Taylor survives that trip down to Phoenix.
Oh, boy. He's pumped. No doubt about that. So
yeah, no doubt. Well, good luck to him. Good luck. Clayton, thank you so much, buddy. I appreciate you.
Thank you. Always a pleasure.
All right. Clayton Pope Commodities. Davis and I will be right back.
If the world is your oyster, we've got pearls of wisdom on AgriTalk.
Welcome back to AgriTalk, everyone. Your pal, Davis Michelson, here. Huh?
Hey. Can I do a shout out?
Chip Flory with a shout out for everyone. Chip?
Happy birthday, Ted. Love you, buddy.
Is that our friend, Ted?
That's our friend, Ted.
Well, happy birthday, Ted.
Yeah.
Mm-hmm.
There you go. All right.
Yeah. Okay. Very good. I wonder how old he is.
Old.
He's older than us, right?
Oh, yeah.
By a wide margin.
By a long ways, yeah.
Yeah. That sounds right. Right. Long in the tooth, but harmless as can be.
And not nearly as smart either.
I don't know about that.
Oh, yeah. Oh, no. No, that's right.
I had beef tacos last night for supper, so it's probably not a fair comparison right now.
You're not running on 100% pork.
That's right. Give me a little swine, then we'll sit down with our paper and pencil. I'll take your IQ test.
I had a little ham in an omelet for lunch.
Ooh.
Yeah.
That sounds delicious.
It was.
Yeah.
A little cheddar cheese in there with it.
Oh, baby. Yeah. Now you're talking.
You bet.
Good talk with Clayton Pope.
Yeah.
I don't know if this is fair to ask you. I don't want to put you in a position to where you have to say, I don't really know. Okay?
Oh, I don't mind.
So the safe word is spumoni. Okay? The safe word is spumoni.
Let me write that down. Okay, go.
Our first segment with Clayton Pope Commodities, revolved around the economy, the Fed, all this sort of stuff here. And something was said that I would love it if you could clarify. The bond market is keeping people honest in reference to rate cuts.
Yeah.
Did I hear that right?
Yeah, you did. You absolutely heard that right. Real cash or real interest rates are traded every day. Every day we see what is happening with the with interest rates. I'm kind of looking to see if I can get a quote of something that I was looking for here. Anyway, don't know if I'm going to be able to find it or not, but I'll keep watching for it.
We'll keep chatting as you look.
Yeah, 10-year quote today up 0.006 to 4.356%.
Okay.
Now, so the 10-year, the 30-year, the 2-year bill, 3-month bill, there's all kinds of different Treasury lengths that are available in the market. The markets, despite all the talk of lower interest rates from the Fed, the markets have not been showing us that. Okay, so Clayton made a great point when he said, listen, the Fed is following the markets. It's not the other way around.
Okay.
So if the interest rate markets are not softening up, then I don't know why. I don't know why we would expect the Federal Reserve all of a sudden to kind of force the issue and lower the Fed funds lending rate. I don't think that's going to happen. Bob Elliott, unlimited funds. There's a good one to ask that question. Okay. And the good news is we've got him on the show tomorrow morning. So
Seriously?
Yeah. So you can ask him that question. Yeah.
People probably think we set this stuff up.
No, we don't.
I had no idea. Yeah.
I know.
I don't read the emails.
I know. No, believe me, I know.
All right. Here's another one for you. Let me just toss this hand grenade in there. An open checkbook on too many fronts right now, dude. Truer words never spoken.
You know, we've got a spending problem. That's the bottom line. It's not that segments of the population are undertaxed. That's not it.
Right.
The problem is that we spend too dang much money. That's it. That is it. We always talk about how costs get inflated, how goals get adjusted, how outcomes become unpredictable when the government gets involved. Yet we always allow the government to get involved. And the thing is, we say time and time again, and I don't know exactly how to turn this into a soapbox speech yet.
Doing great.
But at some point, you and I have to stop saying they need to quit spending. And we need to start saying we need to quit spending and take some responsibility for the amount of money that this country is spending.
I don't know, dude.
And the way that you do that, is you throw the spenders out. That's all you can do.
I'll give you that. Okay. Yeah. Well, and the idea, and I hadn't seen this story, that we're sending foreign aid to other countries in the Middle East, I believe was mentioned, to help them with border security?
I didn't even want to mention it earlier.
Are you freaking kidding me?
I didn't even want to mention it.
What clown world did we wake up in?
It's bizarro world.
Well, it is.
It is. It absolutely is bizarro world. I don't know.
Yeah. Whew. All right.
National Weather Service 6 to
Please.
10 day outlook. This is for April 9th through the 13th. Above normal temperatures expected across the Corn Belt. The highest odds of above normal temperatures to the northern production areas, North Dakota, Minnesota, northern Wisconsin. But hey, we've got good odds of above normal temperatures across the entire Corn Belt. Above normal precipitation expected through most of Wisconsin, the southeast 2/3 of Iowa, far southern Nebraska, and points to the east and south of that. Below normal precipitation expected in North Dakota, South Dakota, and northwest Nebraska. Those warm temperatures, that's going to make it awfully difficult to stay out of the field April 9th through the 13th. Like I said, we've got Bob Elliott Unlimited Funds coming our way tomorrow morning, 10:06 Central, here on AgriTalk.